Yo everyone, hope you're all doing really well. So I'm going to do a video on this AU trade, or case study, and talk on lower time frame entries and basically when to wait for an entry confirmation, and really getting into the sort of the candles once price comes into our higher time frame POI. So I'm on AU and this is the hourly time frame. Now I was looking at this trade. You can see what we had was this candle that came down, which actually broke these lows. So more specifically this low here, ranging for 1, 2, 3, 4, good 5-6 hours. We then see momentum down, new lower low, and we have a lower high, last up close candle. This is our supply zone. This is the sort of consolidation range. That's the last up close candle. So that's where I want to be looking for price to come back into, and to execute on entries on lower time frames. Okay, so we can see a break of structure. We did tap in here, but there wasn't really, I was looking at it, but there wasn't really any clear entries for me to take. And it also didn't come into the 15-minute area. Price then broke structure again. But if we drop down, you can see I've marked on that hourly order block. Price tapped in here. So what I want to do now is drop to the 15-minute time frame and look at this area. So I did refine it to that candle there, because I always say I will refine my hourly order blocks when I can see a very clear reason to actually refine it. And you can see we have the last up close candle before momentum on that candle that broke structure. Okay, so that is where we can refine to. You can see price didn't really come in, it just sort of literally tapped the low and broke structure again. And there wasn't really any entries within these areas here, or even here. They was more so used as, we got a reaction, and then these can be used to seek liquidity for price to come into a higher area up here. Okay, so now we've got the refined 15-minute OB. We can put that on there and drop to the execution time frame. Now I say execution time frame, but for you that might be the 5-minute. If that's the case, then you can be using that. But for me it's the 1 minute, and we can see, if I bring that over a little bit, we can see, as we always get on the lower time frames, we have bullish breaks of structure, because price obviously needs to come into that into a higher price to get into a higher time frame area, and it's not going to do so forming lower lows and lower highs. It's going to be putting in bullish structure. So we can see we broke that high, we range, we mitigate, come back into that range, and we barely come into that last down close candle. And if you're refining to that inside bar, then you wouldn't be tagged into the trade. But again, we have a new higher low, we range, higher, and we don't really mitigate these moves on the way up. So for me that's more of a reason for price to come down to seek them lows once it's tapped into and mitigated the higher time frame area. Okay, so if I'm going to bring price forward now using the replay tool, we can see it is this candle where price is now tapped into the 15-minute OB, or the hourly OB refined. And really, once price comes in, we really want to be taking a close look at each candle. Although it is just 1 minute candles, it can tell us a lot. So we want to be really focused and looking to see what price is actually showing us. So at this point here, what we can see is we have a high, and inside bar, but we have the lowest point of this pullback. So higher low, higher low. Okay, we broke structure. The most recent demand is either this last down close, last sell before the buy, inside bar, or where the momentum before the momentum came in. Sorry, couldn't say the word then. But yeah, that's where the momentum came in, that broke structure. You know, this is our consolidation demand, and really we want to be looking to see if this can be mitigated or violated. Okay, so we've tapped in to the 15-minute OB. Now we've pushed down, so at this point here we are still bullish, and what we can now see is we've actually taken out that high, and what happens next for me is quite important, because is that high a seek of liquidity or is it still bullish? And I'll show you what I mean by that. So what we can see now is we are ranging, and we have now mitigated this demand. Okay, so this is a valid buy, but what we can see from these previous breaks of structure is, look how far past the most recent high price has gone. You know, quite a way, showing momentum. Even here we've pushed away from that high. From here we've pushed away from that high and that high, and same here. What we can see from this break of the high is barely broke. So when that happens, it's more of a seek of liquidity for me, because it's taking out the high, seeking the liquidity from that high, and then coming back down, retracing straight away, ranging. You know, there's even a form of equal lows within here, only, you know, little sort of equal lows with, you know, this move and this range. We seek it, tap into demand, imbalance, fair value candle, we mitigate, and we do go a little bit lower down to the low, which also is liquidity. Okay, so sell side liquidity in the form of equal lows. Okay, so what does that mean? Well, it's a more of a reason for price to come down, to seek that liquidity. And one thing I did forget to mention is, if we look at structure, what we have is, although that's barely broken, it's still putting a new higher high. And then where would the most recent higher low go to? Here. Okay, because we had a higher low. We made a new higher high with this candle, which also seek liquidity, and we have a new higher low, which would be this lowest point here. As you can see, most recent sort of pullback, higher low range, and this move here has broke it, but how has it done so? Corrective, and no sort of, well, nothing to show that momentum's changed or shifted down. Okay, so we do just wick it, we push back up, but it's still the most recent higher low that I want to see broken, and this is the move here that's broke it. We did break it here, but as I just said, not with momentum, and you know, it's just ranging. This is the move that initiated out of that range, mitigated this demand, and it's broken structure. Okay, so as we know, we have a valid order block on this candle. Okay, so the last buy before the sell down, broke structure. This is the area where I would be looking to place my order. So on the bottom, and that's the wrong one. Okay, and it's when we come to talk about stop losses, you could be factoring in that high, but for me it wouldn't really make sense, because that was a high that took liquidity, and if this is going to come into this area and then continue down, it doesn't really need to come up to this high again, because liquidity has already been swept from this little move here. Okay, that's just my own view, so I wouldn't really factor in that high in this scenario. More so looking just to, you know, to secure the high on this order block, and which would be 3 pips. And you can see on this candle, or even once we mitigated on this candle the demand, that's when I'd be placing my order at the order block. Okay, so just here, 3 pip stop loss above the order block. It won't make sense to have a 2 pip stop loss or even 1.5 because it don't make sense. You're likely to be tagged out. You wouldn't have been in this example, but you know, we're not playing with we're playing with facts, and if this is going to continue, it shouldn't really come above this high. Okay, that doesn't mean it won't, because it will sometimes, but you know, we're just playing with sort of facts and sticking to our plan basically. So tagged into a trade on that candle, and I did not take this trade as I said, but this is how I'll be managing it. So at this point here we have a low and a lower high. Okay, this is the low that I want to be I want to see taken out, and which would also sweep liquidity, and we take it there but we don't close below. Okay, so I'm not taking my stop loss yet. Okay, so we've now closed below, so my stop loss would be now just below break even, just to factor in the spread or commission, whatever, and we can change that to red so we know that's the stop loss. Okay, so no risk on the table, and if we look left, we have this next sort of demand area where price is likely to react to. Okay, so we can either, you know, whichever candle you use, if you even use the last sell candle, or you know, refine it to this candle. Okay, right, so price is pushed down now, running around 3.5. Okay, and we've now tapped into that demand. Okay, so you'll notice how we see a reaction, which is very common when we're looking at these minor sort of demand or you know, supply areas. We're more than likely always going to see a reaction because buyers are trying to hold these levels. These levels here, you can see, look, we even mitigate and we try and hold. We push up, then supply takes over and the higher time frames take over. Okay, and you can see that we do react, we react again, and then we push through it. Okay, look, this is liquidity for me because buyers are getting in here, or they're trying to hold this level. So once we broke here, you can see we pull back, lower low, lower high. Okay, so now I will be trailing my stop loss to that area there, and potentially scaling in, and I would be looking at this candle refined to that candle there, but for this example we're just going to focus on this trade and sort of trade management, and yeah. Okay, so at this point, running, well, 4.3, lows of 5.4, we have this area here as the next sort of minor demand, because you can see that we broke structure. This is an area where buyers are trying to hold. You can see reaction, range, and we break through it. Okay, so for me, once it's broke, lower low, lower high, lower low, lower high, I would be moving my stop loss down just above that high there to lock in 4.3. Okay, so just literally just following structure and the trend down. Okay, and the next sort of area would be obviously this area here, and you can, once the price comes into these levels, you can partial or either set targets, whether that be 1 to 5 or 1 to 10, wherever it is. You can set targets. For me, I like to just trail stop loss, because there's no saying that this price action, you know, with lower lows, lower highs, won't continue for, you know, 30R, because it happened on, you know, it does happen, like even on this week on EU and AU. I think it was either yesterday or the day before, where price just continued, you know, and managing your trade that way, you can bank whatever you want, really, if I'm being honest. So that's why I do that, okay? Because even if you sort of catch 3 to 4, 5 trades a month, that can be, you know, 70, 80, 100%, like, and that is, you know, obviously crazy for a month. So yeah. Okay, so carrying on, lower low, lower high, stop loss is here, and you can see we now put in a new lower low. We've closed below, so this is when I move into just above the high to lock in 5.3. Okay, and I would have been tagged out there for 5.3%. Price didn't actually come into this demand, and let me just delete these off because we don't want to over confuse it. Okay, you can delete that off. Okay, so that is how I would manage the trade. And if we look to see what we had next, is we've now pushed up. So I want to quickly go to the 15 and just zoom right in and look at this. Okay, so what I can see from this is still bullish on the higher time frames, or the 15 5 minute is still, you know, putting in higher highs, higher lows, and this is just a sort of a pullback. So we have this last candle here. As I'm sure you can see, we've broken structure. Although we did already push up above the high, I would class this as a break of structure. As you can see, price came into that area and we've broken structure. So we know that we are at a 15-minute sort of demand. We've broken structure, and this isn't really a trade I would be personally looking at. But if I just move that out of the way and sort of delete this off now. So that first trade was around 5.3%. So let me just bring that to the side. All we can see is we have lower low, lower high. We've broken structure. Okay, so we can mark it on. Change the color. And as you can see by now, we have the last sell before the buy. And we can factor in the wick on the next candle. Depends what you want to do. So what we can do is set an entry. I'm not too sure if this is going to win or lose, but we can put a 2.5 pip stop loss. Let me just change that to that color. And we can see a break of structure. We violated the most recent lower high. And we can look at the most recent supply. We can say it's here, but for me, this is more significant because it's a clear push down. We've fouled supply that created demand, okay? And we've obviously left imbalance on this move here. We have an inside bar which price may react to. I'm not too certain what happens, can't quite remember. But we get filled on that candle there. And we push off. Okay, so again, if I was to be taking this trade, I would be looking at this area here, because that is the most recent high. So we break structure, we put in a high, a low, high, high, higher low, we break it, we tap in, we get filled on the entry, and that's the high I want to see taken out. But saying that, that is a good 4%. Now if we do come to test that high, I don't really want to be giving back 4% and then turn it into a loss. So once we sort of break this candle here, and especially with this momentum, I'd be moving to break even. Okay, and then we can see what happens next. We come in to fill that candle there, and Do we take the high? Okay, we take the high. So I'll be moving to the most recent low. Turn it red. And keep it going, running around 7%. Just go through this quickly. We put in equal highs there. So do we come to sweep that? And we do have a potential scaling trade, but what's price going to do? Just pull back deeper. Yeah, we pull back deeper and get taken out there. And yeah, that's where price is now. So I thought I'd just go through that trade. Like I said, I didn't take the trade, but you know, it's all, the lower time frames are all stemmed from the higher time frames. Picking out your points of interest, you know, imbalances, supply and demand levels, refining it down, and you know, the sells could have continued down to a new lower low, and then you know, you're in for a great trade if you know, lower time frame structure is intact. But you know, we don't want to be giving back a lot of percentage, and we want to sort of bank, and especially looking at the hourly where we can see we are very low down. You know, we started up here and we are very low down. We have some areas where price may need to come up back to, because you know, this isn't going to continue forever, trending down. So yeah, I thought I'd just do that video. If you found it helpful, let me know, and any questions you have, hit me up in Discord, as I always say. And yeah, I hope you all have a really good weekend.